So very good afternoon, everybody. I hope everybody has gone through all the recordings, notes, everything. Tell me, or no? Hey, am I audible? Visible? Bolo. Visible or no? Tell me. Bolo. Can we start? Yeah. Quickly, let's start. Today being the last day, right? Let's quickly start. Sources of capital. I hope the notes are visible to you. Tell me. A lot of section C theory question have come from this chapter. Okay. So don't ignore this chapter at all. Sources of capital. Correct. Very important chapter. Right. I would never for anything. This question has come up so many times in exam. What is the criteria for choosing source of finance? Right. It's an LDR question. Has been asked so many times in exam and will be asked this time around also. I have a feeling इसमें Islamic finance is something that is asked a lot of times. Islamic finance could be something. Finance for SMEs. This time I don't know why. I feel finance for SMEs is something that will be asked in the exam. Right? You might find a question, right? If a section C question comes up on WACC, right? Then this time around you may have a WACC question as well. Calculation of WACC. This is my prediction of the paper. One NPV question, right? Or maybe sometimes at times it happens that a working capital management question can also come up. If the examiner has to ask a working capital management question, then I think I have given you one question. Do you remember Gorwa company? Hello? Gorwa company, do you remember Gorwa company? Which is what? Tell me. Over trading. Don't be surprised if over trading appears in the exam. Because what examiner has done is this time around Gorwa company is removed from your study or your exam kit. So there are heavy chances, right, that Gorwa company can occur in exam. So kindly don't ignore that question at all. Okay. That is how you should go ahead with it. Chalo, theek hai. Right? So first criteria for choosing source of finance. What is the criteria? Cost. If so, whenever you are choosing source of finance, whether you should go with equity, whether you should go with debt, is something that you need to see. Correct? If cost is to be considered, equity is going to be a risky prospect and hence it will be more costly. Debt is comparatively less risky, right? For the investor, equity will give more return, but for the company, it will be more what? Tell me, expensive or costly. बराबर है क्या? देख लो, have a look, right? Then in interest or in debt, you have a what advantage of tax shield on debt is available. So not only are you going to look at just the interest or the cost, but you are also going to look at the tax shield that is given by interest. But tell me, equity dividend, is it compulsory to pay equity dividend? Not at all compulsory. Correct? Equity dividend not at all compulsory. And no tax shield available on equity dividend. Matching duration, if you want a short-term finance and what? Less risky and less return for the investor. Short-term finance generally is less risky and lower cost. Long-term finance generally is more risky, more return and more cost. बराबर है क्या देखो? Matching duration of finance with life of investment. Correct. Generally, you do what? Short-term assets being funded by short-term finance, long-term assets being funded by long-term finance. We have done yesterday or day before yesterday, Sunday ko we did now. Do you remember the part? What was the part? Very was working capital investment strategy and working capital financing strategy. Has come up in exam too many times and will come up in exam a lot of times. Term structure of interest rate is nothing but short-term finance is comparatively less expensive and or cheaper and long-term finance is comparatively what? More expensive. Not true in every sense, but yes, correct. Then gearing may if you have a high P ratio, correct? Or high debt equity ratio, P ratio का बोलो, high debt equity ratio, correct? Then the gearing, if it is very high, take equity. If the debt equity ratio is low, you can take what? Debt. Accessibility and security. A lot of big companies have more accessibility to more sophisticated sources of finance, and small companies have less accessibility to what? Tell me. Sources of finance. Security, debt where you require security, right? If there is no security, you will not get a good debt amount, correct? Then gearing, gearing. Gearing, I think yesterday also we saw a bit, but no, yesterday no. Gearing is there, right? एक तो gearing में ungeared company, a company which does not have debt at all. Gearing means having debt into the what? Capital structure, right? A geared company is a levered company. It is called as mix of debt and equity. Gearing, we have seen 3 or 4 formulas. One is your financial gearing, one is your what? Equity gearing, right? Or capital gearing, right? One is debt is to equity, one is what? Debt divided by debt plus equity. Then you have something called as operating gearing, in which if you have very high fixed cost, there will be a problem. If you have lower fixed cost, right, you are operationally a better company. Fixed cost means gearing. Higher the fixed cost, higher the gearing. Not very good for the company. Then you have interest gearing or interest cover ratio. Correct? Huh. One of the prospect, I don't know whether you have seen it or not, but most of the cases, thoda sa if you think about it, right? When I say debt is to equity or debt divided by debt plus equity, generally when you take book value, in book value equity के अंदर you take equity share capital plus reserves, right? But when it comes to market value, right, you do what? Number of shares into the market value of share. You don't add reserves once again in the market value in equity. Keep that in mind. And for again, it is going to happen where in WSEC, right? This is how it is. Then operating gearing is nothing but the formula is what? Fixed cost divided by total cost, or percentage change in PBIT divided by percentage change in sales. That is one for way of what? Or also fixed cost divided by variable cost could also be the what? Tell me. Lower the operating gearing, better it is. Interest gearing, what is the formula? Tell me. Interest gearing is what? Tell me. The interest divided by PBIT. Interest divided by the PBIT. How many times? Right? Or what is the percentage of gearing? That is 25% of your PBIT is your interest. Then 40 by 10, that is 4 times. That is interest cover ratio in times. 4 times. Correct or not? Have a look. Lease and sale and lease back. One short-term source of finance is lease. Finance and operating, both lease are included. Correct or not? Financing lease are fixed lease premium at cost. Correct? Plus interest to buy an option of buying at the end of the ride. Right? Your financing lease generally is what? The option of buying is given at the end. Operating means it is actual renting or leasing of properties. Correct? Then going ahead, you have what? Sale and leaseback. What is sale and leaseback? Tell me. Sale and leaseback. I don't know why this time around, if they have to ask a 2 or 3 marker question, sale and leaseback as a short-term source of capital, maybe a applicative theory where the company says that, boss, I have an asset with me, a factory that is there, right? There is a bit of loan available or loan on that factory, and we have a very less borrowing power, correct or not? And hence, what would you recommend? We want money. So sale and leaseback could be one option of what? Raising money. So what do? You sell the asset to the bank. Physical possession is with company only, and bank gives loan, and bank repays this loan as a what? Or against this, the sale proceeds are given by the bank to the factory owner, and then the factory owner gives what? This loan or whatever sale amount back. He sells the property and leases it back from the bank or financial institution. Then going ahead, the long-term sources of finance, there are 3 sources. Has been asked this also, right? That what is the best way of what? Tell me. Taking up what? Bolo. Taking up long-term source of finance. Equity, preference share, debt. Equity mein, these are ordinary shares. You are given voting rights in the company. You have ownership in the company. You will be paid dividend, but it is not compulsory to pay dividend. Dividend may not give any tax savings, right? And not compulsory. Generally, these are irredeemable, right? And they are given the last preference in repayment in liquidity. Correct or not? Preference shares. Preference shares don't give you ownership in a company or voting rights in a company. Preference dividend is paid before equity dividend, but after interest and tax, right? No tax savings available here. Preference dividend has one flavor of what? Debt, where fixed percentage of interest is there is in earning it is available. Irredeemable and redeemable, both preference shares are there, but most probably you will have irredeemable preference shares that are there. Preference share or equity share or preference over the equity share. So second last payment in the case of liquidation will happen to what? Preference share. Then debt, correct or not? Debt is long-term debt generally, right? Debt is amount borrowed by company, so no ownership or voting right in the company is given. Even for preference, no voting right is given. But in preference, if you don't pay dividend, then preference shareholder become what? Normal shareholder. And they can have what? Voting rights, correct? Debt mate is interest is paid before tax, preference, dividend, and equity dividend. Tax savings is available. Interest generally at fixed and to be paid compulsorily. Redeemable, irredeemable debt may both. There is nothing that one is famous, other is not. Preference over all types of shares in repayment on liquidation, correct? Very, very important in cost of capital gearing perspective, right? Whenever you're calculating gearing, what will happen? Your preference, will it be considered as equity or a debt? Tell me. Generally, it will be considered as debt, right? Then there are types of debt. What are the types of debts? Bank loan, loan note, others. In bank loan, you have long-term loans given with the bank and generally at fixed or a variable rate, correct? These are non-tradable. With loan notes, you have three types of loan notes: irredeemable loan notes, redeemable loan notes, and convertible loan notes, correct? And then you have what? Secured against, irredeemable, generally secured against any specific asset or whole of business, right? Then fixed interest, no repayment of principal. Here in irredeemable, no repayment of interest, but in redeemable, repayment of interest will be there. And here in repayment, you have an option either to receive cash or to receive what? Tell me. Shares in redemption, right? And then you also have what? Loan note with share warrants, correct? Gives you right to buy equity share at discounted prices and is attached with the loan note. So with the loan note, a share warrant is attached. So you can buy shares when you buy the loan notes, correct or not? And then you have what? Advantages and disadvantages, correct? Cheaper than equity, obviously cash flows can be easily predicted, right? But one of the disadvantages they are not flexible. Equity, when you don't pay dividend if you don't have money, doesn't dilute control in the company, correct? And disadvantage, high gearing. If you have too much debt, high gearing leads to bankruptcy and are redeemable and generally must be repaid, correct or not? This question, sorry, yes, obviously. If so, will we do 1 minus tax rate? See, irredeemable, it does not depend. See, I am telling you, all of you have that problem. You have not understood business valuation. Have I made that chart? I showed you that chart in the notes yesterday. No? If you have not understood, if you are not understanding, this is how you should understand it. Have a look. This KD, when to do 1 minus tax rate. If KD calculation is asked to you and it is for company, then company gets a tax shield. So KD 1 minus tax rate will come. If KD is asked and they say please calculate KD from investor point of view, then you will do not do 1 minus tax rate. But if market value of debt is asked, correct, then logically you have to do what? KD before tax. So in these two situations, this and this, here you have to find KD. Here you have to find market value of debt. In KD for WCC of company or KD from investor point of view, market value will be given to you. You have to find KD, Baba, both by IRR approach, but one is after tax, one is before tax. Correct? Have a look. A lot of you, I think, have the same doubt if I'm not wrong. Correct or not? Tell me. Makes sense or does not make sense? Okay with this? Please read this. I have made this table only specially for all the students. Right? In MCQs, what is to be done? Correct? Then coming back to what? Tell me. The sources of capital. Types of debt, then types of bonds. You have the regular original bond. You have deep discount bonds, which are issued at what? quite a low interest but at very less cost than the nominal value and will be redeemed at what? Nominal value. Then there will be zero coupon bonds, correct? Zero coupon bonds is no interest will be paid, right? Buy at discount or at nominal value and redemption at high premium. Correct or not? No interest is paid, but redemption will be at high interest, correct? Then redemption will be at high redemption value, more premium will be. Then you have got equity share. What are the types of equity share? You have the issue of equity share in that. What are the different types of raising equity? Is your placing, public offer, offer for sale, IPO, and FPO. That is further offer to public, correct? Or further public offer. IPO is what? Initial public offer. FPO is what? Further public offer. बराबर है? Then there is something called as right shares, correct? Right shares पे तो there is a full-fledged what? Calculation wala solution that is given to you, right? So have a look. A company can issue shares the following way. Placing is what? Where you place or sell your shares to a financial institution who then sells it to small investors, correct? Small private investors, correct? Then you have a public offer. Public offer generally is an IPO, initial public offer, or a normal public offer, or a follow-up public offer, correct or not? Public offer is generally done either on a fixed price basis or tender basis. Fixed price may you what? Tell that this is the value of my share. You can subscribe for my shares. Public can directly subscribe. But tender may public has to guess the what? Price of the share. बराबर है क्या? Then there is offer for sale. Companies wishing to raise a capital, correct? Practically होता है ना? होता है, right? Wait, एक मिनट. Offer for sale देख लो. Companies wishing to raise capital by an offer to sell. A block of shares, 10-20%, they sell it to what? An underwriting institution that will offer them to general public. IPO is what? First time when public say company or private say company going to public, correct? Or the listing happens, right? Tender पे होता है ना? A lot of what? I think I subscribed for one IPO where they asked what should be the price, correct? So they tell you that how many quantity you want to buy and what should be the price, correct? So you accordingly have to bring up the price, correct? Or update the price and put it up in the offer that you are putting to the company. Then it is on the company to accept your offer or not accept your offer, correct? Right? Then, right issue, basic right issue. That is what now the new TERP ka formula is also there given on the study up, not available in a lot of books. But पहले basic right issue कर लेते. Right issue is nothing but it is the right given to existing shareholder, right, to apply for shares at a discount, right, lower than the market value of the equity. Then there is something called as after the right issue, theoretical X right price of the company, correct? Or also known as the weighted average share price after the right issue, correct? So theoretical X right price, the formula is what? Existing shares of company into market shares, or also it is called as market capitalization plus right shares into right issue price. That is the discounted price, the whole divided by existing shares plus the right shares that are there. Then right or value of right. Value of right. When it says only value of right, means value of right per right share. And when it says value of right per existing share, what is the formula? Have a look. Value of right per right share. How does it work out? The TERP that you calculate minus right issue price, that is nothing but the profit that the right issue shareholders are what? Earning. And when it is lost to existing shareholder, or it is called as a value of right to existing shareholder, is nothing but the TERP minus what? The market price, correct or not? Or market price minus TERP gives you the loss, right? Then in that case, you also have what? If you sell the rights, in that case, there is an MCQ that is asked, correct? That what will happen to the wealth of the shareholder if he takes up the right, does not take up the right, or sells the right to someone at minimum value of right value. So in that case, if he does not do anything, he will lose wealth. But when it is what? Tell me. He takes up all the rights or sells the right and at least the value of right, there will be no change in his wealth. There is one MCQ based on that. Then there was something called as what? Tell me. Where the money that is raised from right. Okay. On the next page. Right share plus NPV implication. New question. You might just find this question in section A. हो सकता है this time around this question might cut copy paste appear in the exam. So company has existing share of how much? 15 million shares at $10. Some right issue का raising is done with this, which is going to be invested into project, and उससे जो NPV आएगा that will also be added into the TERP calculation. So your existing shares into market value, right share into right issue price plus the NPV that you have won divided by the number of shares, which will give you your TERP with NPV implication. Correct? So maybe there was one question given in what study. अब ये study आपका question है देखो. Don't ignore this. Directly, maybe a 2 marker can come up. Then there is something called as venture capitalists. Who are venture capitalists? Tell me. Venture capitalists are one who have innovative ideas, which are high growth business, which have high growth business potential. Correct? And what? Tell me. Which where people will invest the money, promoters will invest the money. But there is something called as equity racket that works in a venture capitalist. Now, what will equity racket mean? Someone like from Shark Tank India will buy certain 20% shares into the company. Then they will say that boss, I want this much XYZ return to be achieved by the company, which is very difficult to attain. Company will fail the target, and the initial investment the contract will say that if you do not fulfill the target, we will get free equity into the company. ऐसा कर करके they will get 20, 20, 40, 60, 80% into your company and kick you out of your own company. Correct? Has happened a lot of times with a lot of what? Tell me, companies will happen going ahead, right? Then if you have say finance for SMEs has two problems: maturity gap and funding gap. Correct or not? Maturity gap is nothing but what? Tell me. Your Tell me, you have short-term loan, you have long-term loan, but there is a problem with SMEs, right? To get what medium-term loan, and hence always there is a maturity gap. When there is a funding gap, correct or not? Have a look. Funding gap. Now see, SMEs में problem क्या है? These are small family-owned, unquoted companies who have no track record of any financial statement. Hence, no one gives them loan, right? They can get short-term loan against their what? Inventory. They can get long-term loan against their what? Tell me, properties, secured loans. But medium-term loan for expansion they will not get. Then there is something called as funding gap. Funding gap is what? Right? They want loan, but they are not getting on. They don't get the money that they require. So how can this funding gap be fully what? Fully bridged by various sources of finance? Supply chain finance, SCF, right? What happens in supply chain finance? Let's say a SME is working with a big corporation like Mahindra. So what does it do? Is sell goods to Mahindra of 3,000 units. Now what happens? Mahindra does what? Achanak say it increases the order size from 1,000 to 3,000 or 10,000. Correct? So SME does not have that much money or working capital to make those many units. So what does the SME do? It takes the order that is received from Mahindra and goes to bank and says that, boss, see, I've got this big order from Mahindra. Generally, we do 1,000, 2,000 units, but now Mahindra is asking for what? Some very huge number of units, which we cannot do without additional working capital investment. Then bank what? Verifies the order with Mahindra and takes the confirmation that they will pay within 60 days once order is delivered. So on that verification and confirmation from Mahindra, bank will give what? A short-term loan to the SME, right? Then once the order is fulfilled, the SME will repay the loan. That is called as supply chain financing. So the supply chain does not break down. Then you have something called as business angels, correct? Business angels do what? Just like Shark Tank India, business angels generally provide a small amount of loan, correct? Basically, the $10,000, $20,000 correct? And these are what? Individuals who provide loans. Generally, they could even be your friends, family, correct or not? Their venture capitalists are what? Who invest into your business, correct? Supply chain financing done. Crowdfunding is when a crowd funds a project or business, right? Rather than one or two major investments. So what you do, you see these people doing what? You will get 1% in our company if you pay $10 to us. Those are what? Crowdfunding ways, right? And then peer-to-peer lending. Peer-to-peer lending is nothing but just like your 12% club. There is an app called 12% club. Everybody who has extra money will post that. That boss, I have extra money and bank is giving me 6%, but I want 8%. Now someone who wants to borrow, bank is offering them 10 or 12% borrowing for it. They also come on the app, right, and say we want loan. Bank is given 10%, we wanted 8%. Someone who wants 8% and someone who's ready to give 8%, they all come on one platform, right? And they both exchange what? Capitals. But this is government has a lot of trying to what exercise a lot of control on this. But government have not been very what? Tell me. Successful with this, correct? फिर आएगा Islamic finance. Islamic finance has two or three basic rules. Interest is forbidden in Islamic finance, and share of profit to person providing the finance is the way to go. Interest will not be paid, and also that Islamic finance fund should not be used for businesses like gambling, alcohol, etc. Right? Then you have instruments of Islamic finance. You have 5 instruments, right? Plus now 2 instruments have been added this time around. So you have 7 instruments. So out of the 5, correct? So देख लो, you have a 3M information system which gives high quality return, correct? 3M means what? There are 3 M's: Murabaha, Mudaraba, Musharaka. Murabaha is trade credit and loan. But I would always remember what if they tell you that boss, we want equity, like now application type questions will come up of what? Islamic finance. They will tell you that, let's say we want a loan based on Islamic finance. Loan. Normal loan from bank for buying an asset. What would be the best way? You have two options. Ek to ijara, through a lease, and the other is what? Trade credit or murabaha or loans. So what does ijara say? Ijara is nothing but a operating lease plus option to buy at the end. Correct? So here you will say what is the lessor, what are the cash flows for the lessor, what is the lessee, what are the cash flows for the lessee, and then at the end you have buying option. Then you have sukuk. Sukuk are called as Islamic bonds. Correct? Islamic bonds are what? Normally bonds mein what do? The company wants the asset, it buys the asset on its own name. Possession as well as ownership is the company, but it is hypothecated. The bondholders are hypothecated or are parties to the loan contract, because through them or through their money the asset is bought, right? If anything happens, they can sell the asset, bondholders, and get their money, right? And bondholders will be paid interest and repayment will be done after certain time, correct? But when it comes to sukuk, so when you're writing sukuk, it is important to write what happens in normal bond and what happens in sukuk. Mein sukuk holders are owners of the asset, company is merely using the asset, no interest, but any profit and loss that is churned out from that what asset, uska share will be paid to the sukuk holders, correct? That is how it is, and repayment will happen at the end, and sukuk holders will take all decisions regarding the asset. These are the important points that you need to write. Then there is murabaha. Murabaha means trade credit, normal trade credit, and loan. In normal loan, what happens? Sir, we take the asset, bank gives us loan, correct? So what do we do? Tell me. So for also buying an asset, sukuk is also an option. Sukuk and murabaha both. Murabaha mein what happens? Have a look. Right? Normally, what do? I want to buy an asset. I go to bank. Me, bank, and the supplier, we enter into a contract where bank gives me the finance. Right? Bank directly pays to the what seller. We get the asset. Asset is in our name, but hypothecated with the bank. Something happens, bank can sell the asset, get its money. Correct? But ownership is with the company or Mr. A. But when it comes to Murabaha, in Murabaha, what happens? Bank will buy the asset first, add its own profit, and then sell it to you. Right? So, and then in equal installments, you will pay back to the bank. So, logic is normal EMI of what? Tell me. Right? Logic of normal what? Tell me. Loan only. But bank will first buy the asset on its own name, then sell it to you at a profit. And that profit is nothing but interest, but you cannot write it like this. So bank will charge profit and give it to you. Then your ownership will come, and then you will pay the whole amount in EMIs. Correct? देखो जरा. When so someone asks a doubt, what is the doubt? That ownership, yes. हाँ. Yes, the sukuk holders will only be the owners till the end. Whenever it is to be sold, you will have to ask sukuk holders and then sell the asset. उसमें भी जो after selling you get profit or loss has to be shared by the sukuk holders. Correct. Then you have Murabah done. Correct. Then you have Mudaraba and Musharaka. Mudaraba is simple equity finance. One person with money, other person with skills come together. They run the business. If there is a profit, they both share it at PSR. But if there is a loss, only Mr. A, that is who brings the finance, will boon the loss. Rabul Mal is the person who bringing the money. Correct. And Mudarib is the person who does what? Management. But when it comes to Musharaka or partnership or joint venture, Mr. A, Mr. B, both with finance and management skill come together. Correct. Right. And then if there is a profit, it is shared in PSR. If there is a loss, it is shared in capital sharing. And then there is now the high quality 2 points is what hiba or gift, right? So you have your savings account. Generally, we are paid what interest on savings account. Instead of that, in what if you keep some FD or some savings account में balance, right? That some gift will be given to you voluntarily, right? That is called a savings account पे gift. Yeah, the gift represents the portion of the profit made using their balance in other activities. Savings account का balance they have used. Then Kard Hasan or Kardul Hasan or good loan or benevolent loan. This is involves a loan extended on a goodwill basis, and the debtor is only required to repay the amount borrowed. बराबर है. However, the debtor may at the discretion. So it is a loan given. You don't need to pay interest or don't need to pay anything else other than the loan amount. But if you feel that that person has helped you and you want to pay an extra amount, you can pay that extra. That is Kard Hasan or Kardul Hasan, whatever you want to say. Right. Then last but not the least is pecking order theory based on cost, and this is from company point of view. Pecking order theory, right? So first preference whenever company needs money, we'll go to retained earnings because that is the cheapest source of finance, correct? But one of the problem of using continuously retained source of finance or retained earnings is that what will happen if you have very high retained Yes, sorry. हाँ, इज मुराबा ओनरशिप लाइज विद कंपनी और बैंक, बोलो ना भाई, मुराबा में बैंक सेल्स यू द एसेट, करेक्ट, ओनरशिप पहले कंपनी की होगी, सॉरी बैंक की होगी, एंड देन बैंक ट्रांसफर्स इट टू यू, करेक्ट। तो चलो लास्ट, पैकिंग ऑर्डर थ्योरी, पैकिंग ऑर्डर थ्योरी, व्हेनेवर कंपनी व्हाट नीड्स मनी, सबसे पहले रिटेन अर्निंग्स, करेक्ट, राइट, नो कॉस्ट एट ऑल, बट इसमें प्रॉब्लम क्या है, इफ यू आर सैक्रिफाइसिंग डिविडेंड एंड यूजिंग द रिटेन अर्निंग्स फॉर व्हाट बिजनेस, देन इन द लॉन्ग टर्म द इक्विटी शेयर होल्डर विल नॉट बी वेरी हैप्पी, करेक्ट। प्रेफरेंस टू आपका डेट इशू होना चाहिए, उसमें भी बॉन्ड इशू, करेक्ट, उसमें भी सबसे पहले सिक्योर डेट होना चाहिए, बिकॉज लोएस्ट कॉस्ट, अनसिक्योर डेट अ बिट ऑफ हाईएस्ट कॉस्ट, एंड लास्ट इज प्रेफरेंस शेयर होल्डर, सबसे ज्यादा हाई कॉस्ट, करेक्ट, और योर डेट का रेट, देन प्रेफरेंस थ्री विल बी योर रेजिंग इक्विटी, उसमें भी फर्स्ट प्रेफरेंस इज राइट इशू एंड सेकंड प्रेफरेंस इज न्यू शेयर इशू। बट यही अगर आप इन्वेस्टर पॉइंट ऑफ व्यू देखोगे तो इट विल बिकम पूरा अपोजिट, he would want to have equity share because he will get highest return, correct, then he would go for debt, and then retained earnings तो उनके लिए ऑप्शन है, right, but for investor it will go उल्टा, first he would want new share issue, फिर right share, फिर what secured, फिर preference unsecured and then secured debt, correct। इन्वेस्टर को कम पैसा मिलेगा, कंपनी का कॉस्ट कम, तो इन्वेस्टर को रिटर्न कम, करेक्ट ना, बराबर है, देख लो नाउ, आ जाओ, कॉस्ट ऑफ कैपिटल, राइट, क्विकली, एक काम करो, यू वांट अ 10 मिनट्स ब्रीदर, 10 मिनट, चलो एक 10 मिनट्स ब्रीदर ले लो, इसके बाद दिस क्वेश्चन और दिस चैप्टर एंड व्हाट, 10 मिनट, हाँ बोलता हूँ मैडम, सब बताऊंगा, राइट, कॉस्ट ऑफ कैपिटल के इंपॉर्टेंट क्वेश्चन भी बता, ठीक है, ले लो एक 10-13 मिनट ब्रेक ले लो, 3:10 तक।
Sir, sir, we have lease financing in short term and long term, no, sir?
शॉर्ट टर्म एंड लॉन्ग टर्म बोथ, बट जनरली शॉर्ट टर्म में ही लीज फाइनेंसिंग आएगा।
Sir, in short term lease financing, the lessor will have the this thing to, he has to do the repairs and maintenance,
हाँ,
whereas in
बट
long term,
एक्चुअली मैडम ऐसा है कि मेंटेनेंस कॉस्ट का ना बहुत ओपन सिनेरियो है, राइट, मेंटेनेंस कॉस्ट का सीन इज यू हैव टू बोथ डिसाइड, बिकॉज अगर आप शिपिंग कंपनी में जाएंगे वेयर देयर इज अ शॉर्ट टर्म लीज, व्हाट डज शिपिंग कंपनी डू, वो क्या करता है कि जनरली जो लेसी होगा ना उसको ही क्या बोलेगा, यू बेयर द मेंटेनेंस, बिकॉज शिप का मेंटेनेंस बहुत हाई होता है। बट फ्लैट हुआ, आप अगर फ्लैट लिया भाड़े पे 11 मंथ्स, करेक्ट, you lease the flat or lease some what building, उसमें generally maintenance is with the owner, so एक basic assumption it is with the owner, right, हाँ, but long term होगा या finance lease होगा so everything is to be taken care by the lessee, because lessee क्या है, he is going to be at the end owner of the asset, you will give him option at the end to buy the asset, बराबर है ना।
understood, sir. Thank you.
तो फाइनेंस लीज में लॉजिकली एवरीथिंग विद द लेसर, सॉरी लेसी, ऑपरेटिंग लीज में जनरली लेसर, तो all the questions that have come up in exam in lease versus buy also are operating lease questions, so default assumption is lessor, correct, if given specifically in question कि नहीं lessee will take care of it, then lessee, example shipping company,
Okay,
correct,
sir. Understood. Thank you.
right, तो आ जाओ 3:12 तक आ जाओ quickly।
અહીંયા આવી ગયું પોપાય અમારે છે જ મેલમાં અહીંયા જે તારું આ બ્લુ આવે છે ને આઉટલુકમાં આજે તારા બહાર છે અમારે અહીંયા જ છે આઉટલુક પર
चलो आ जाओ, quickly everybody join in, quickly, right? And we start. Now see, important areas, sources of capital. Sources of capital, important areas. I would say this, what, long-term source of finance, right? Long-term source of finance, 100% important. 100 200% important. Equity, preference, debt. MCQ point of view important, right? Gearing का formula 100% has come up. Any type of gearing, operating gearing हो गया, your what? Tell me. Interest gearing हो गया, that is important. Advantages, disadvantages of debt has been asked too many times in exam. Then I would say finance for SMEs में, if I have to ask a question, section A या section A question generally, correct, would be on these funding gap can be bridged through what all ways. Islamic finance section C theory question most important. Pecking order theory section A and B में very important. That is MCQ type, correct. Right issue section C में has been asked before, can be asked in section C only, correct. You know cost of capital, right? The cost of capital part, you have the basic WACC, correct. How the basic WACC question goes on, right? What is basic WACC? Two things that are all important. The formula is V is equal to VE is equal to what? अरे बोला मैंने अभी, क्या बोला सारे, बोलो उसको. What did I say? एक तो gearing important है, criteria for choosing source of finance important, right? Long term source of finance, these three. Debt का advantages, disadvantages, right? Share section C question. Then you have venture capitalist, finance for SMEs का what funding gap कैसे can be bridged, right? Islamic finance is always important for section C. Section A and B pecking order थे, ठीक है. Those are the important parts. Sure. उसके बाद you have cost of capital. WACC formula is what? V divided by V plus VD into K plus VD divided by V plus VD into VD1 minus tax rate. But if there are different sources of finance, the more the sources of finance, the more brackets will be done, right? So these kind of debts and equities that are different debt or equity that is there, वो सारे क्या हो जाएंगे, ऐड हो जाएंगे, right? Or you could also use the table method, correct? ये वो एक्सेल में भी है क्या आपने जरा. तो एक टेबल मेथड है, दैट आई थिंक इज ऑलवेज बेटर, बराबर है. WACC टेबल मेथड हैज बीन ऑलवेज इफेक्टिव एंड इजियर टू डू. फिर if there is a tax rate that is given, the tax rate will have impact only on the KD or cost of debt, correct. On KPS or KE, your tax rate will not have any impact. Have a look. The value of capital are easily available either from books of accounts or stock market. But the value of cost of capital, right, have to be calculated. You'll have to calculate KE differently. KE has two methods, DVM approach and CAPM approach. In KE, by DVM approach, you have what? Tell me. With growth, without growth. Correct? With growth, without growth formula is very simple. The basic assumption of DVM is what? Dividend policy is applicable till perpetuity. Intrinsic value or present value of dividend or true value of share is market value of share, and required rate of equity shareholder is equal to cost to company. Now, how many of you know this? But we derive all the formulas of what? KE by DVM method. So the formula is K is equal to D1 upon P0. We have derived this in class. This is without growth formula. Then when you look at what? KE with growth, correct? Now see here, there are 2-3 types of questions that have come up. 0 here, D0 is given and D1 is given. You should always take D1. From D0 to D1, there can be growth that can happen, correct? Growth लग जाएगी D0. So D1 का formula है D0 into 1 plus G. 0 to first year, correct? Have a look. Then there is something called as which growth, correct? Which growth is what? What is the formula derivation सब करने के बाद the formula comes out to what? K is equal to what? D1 upon P0 plus G. This G is nothing but from first year or after first year, what will be the growth till perpetuity? Correct or not? Have a look. D1 upon P0 the whole bracket plus G. But when it comes to D1 ka formula, this growth rate is from 0 to first year. Huh? This growth rate in the main formula is after the first year till perpetuity. Have a look. Right? So that is how it is. D0 and D1 का difference if you want to know. Honestly, मेरे को अगर आप पूछोगे, so if I would have been on your place, whatever questions I have taken in class, right? There is no chance that any other question can come other than what I have taken in class. Those many questions I have taken in class, right? Now there is analysis of share price. Now, if I am calculating KE and I have to take share price, I will always take X dividend share price. What is X dividend share price, right? It is excluding dividend share price. Even if I am in a period where dividend is declared but not yet paid, correct or not, or dividend is about to be paid, if that is the wording, and share price now is given, correct? I will say that it is what? Come dividend share price, and I will use the X dividend share price. How do you go from come dividend to X dividend? From the come dividend share price, you will deduct what? The dividend, correct or not? So how do you go to X dividend? Come dividend minus dividend about to be paid. So if dividend is already paid by company, share price now is given, it is X dividend share price. Dividend is declared but not yet paid hoga, right? And share price now is given, it is come dividend. B or C given, correct, and X and come dividend share price given. You will always take X dividend share price. But you will take this only when KE is to be calculated. But if anyone asks you market value of share in business valuation, in that case, you will always use some dividend share price only if you are in between period here. That is how it is, correct? Then what? Tell me. Yeah, I have given all the examples that can be asked on this, right? D0, D1, right? Then growth rate, you can calculate growth rate by two methods. One is the Leaps method or extrapolation method. Other is Gordon's growth model. Come to the Leaps method. Leaps method is very simple, correct or not? What is Leaps method? 10 years ago, 5 years ago, some dividend was there. Now certain dividend is there. So how many times dividend has grown? So let's say you are given a table like this 2018, 19, 20, 21, 22. A lot of times questions again, 4 years ago dividend was $10. Now it is $14. Calculate growth rate. So 4 years ago, how much it is? So the basic formula is growth rate is equal to earliest dividend. Okay, latest dividend divided, that is D0 divided by earliest dividend raised to 1 by n minus 1. Correct or not? The whole minus 1, right? This is the growth rate by extrapolation method. There is a special question, this question, where a table is given and the today's D0 is given differently in the paragraph. You can view which question. You should surely do Tufa company without fail. Important question. Tufa company. दिख रहा है क्या? Tufa company. Very important question from exam point of view. If a WSCC question has to come, it has to come on these lines only. Tufa company. Tufa. Very important. Correct? Tufa company. TUFA. Tufa company. Very important. Then Gordon's growth model. What does Gordon's growth model say? G is equal to P into RE. B is nothing but retention ratio. RE is nothing but your required rate of equity shareholder or return on equity. Correct or not? Right? Have a look. Right? So EAESH is divided in two parts. How much is dividend paid? You get the dividend payout ratio. Correct? DPRA, how do you calculate dividend paid divided by the EAESH using dividend payout ratio? What is the retention ratio? Retained earnings divided by the EAESH. So get the retention ratio. B is equal to retention ratio. Have a look. Have I written the formula? G is equal to B into RE. If you had been in the class, we would understand the logic. What is the formula? What is retention and why retention ratio into RE is the growth rate. Correct? I have given the logic if you want to read it, right? You will not get the logic anywhere, right? Then G is equal to B into RE. RE or return on equity is nothing but your EAESH divided by the equity share capital plus resource. Whether ROE or RE. Have a look. Right? Then cost of preference shares only without growth, same logic. KP is equal to D1 or dividend paid divided by what? Market value of preference share. इसमें only part or important part would be that you have to remember that dividend is paid on the nominal value of shares. Dividend is paid as a percentage, it will be paid on the nominal value of the preference shares. Correct. Cost of debt, ठीक है, tradable, non-tradable, irredeemable, redeemable. Irredeemable debt तो straightforward like what? Perpetuity तक interest will be paid, right? So if you are doing WACC calculation for a company, KD of irredeemable debt is to be found out and tax rate is given, correct? What will you do? Interest, right? Interest will be calculated nominal value into the interest percentage, correct? Then KD is equal to interest divided by market value of debt from investor point of view. But if asked from company point of view, right? See, KD investor point of view can only be asked in section A or B. Worst case scenario. आज तक मैंने क्वेश्चन नहीं देखा, but one of the books uses this, so I have given this. But most of the question, if you have to calculate WACC for a company, you have to use tax shield always will be there. Interest 1 minus tax rate divided by market value of debt, right? Then company A has market value of debt, correct? हो गया बराबर है क्या? देखो जरा, right? Then you have what? Tell me. KD for WACC, ठीक है. Then you have redeemable debt, right? Redeemable debt is what? Simple. You have the market value given, you have the redemption value given, and the interest given and the tax rate given. So you'll find the interest 1 minus tax rate, correct? देखो जरा, net cash flow, find the IRR of those cash flow, right? And then, so market value always you write in negative because it's from investor point of view that the cash flows are given, but company ka KD is removed, KD 1 minus tax. Then convertible debt mein what happens? Two types of questions are there in convertible debt. Generally, on redemption, you have an option of converting into shares. So whatever is the value of the conversion value or the redemption value, whichever is higher, that option will be chosen. Generally, the question is like today's share price is given, it will grow by certain percentage, or expected share price as on 5 years is given. Both the things are given, correct? Have a look. Convertible debt, ठीक है. फिर bank loan. What is the bank loan? Bank loan, fixed rate loan, generally given 7%, 8%. That is KD, right? On that tax will be saved the KD into 1 minus tax. And then you have a variable rate loan, correct? Use the loan note KD 1 minus tax, correct or not? Variable rate loan note, if it is given variable rate loan note, then you have to take the KD of either a redeemable or an irredeemable loan note and use it same. In Tufa company it is there. Weights of WACC, if nothing given in question, use market value of capital. But if specifically mentioned to use what? Book value, then use the book value. Book value directly available from what? Tell me. Equity का book value is nothing but equity share capital. Market value is what? Your book value divided by number of shares into market value will give you what? Market value of capital. So everywhere loan note में also book value of capital divided by nominal value that is there. एक मिनट इधर book value divided by nominal value, sorry, multiplied by the market value. ठीक है, हो गया. हाँ. Then you have a theory question. When can existing WACC be used for a proposed new project, right? The new business and the old business have to be same, correct or not? Old business and new business, that means same type of business, right? Retailing, correct? Weight of capital of old business and new business should be the same. Whatever weight you have here, that only weight of debt and equity should be used here. New project, specific borrowing should not be allowed. That means you are not borrowing specifically for the project. Fund should be used from a pool of project. Means you have to make a debt and equity ka pool where you have a certain weightage of debt and equity and you use money from there. And new project should be comparatively smaller in size to the existing business. Most important question from section C. If section C question has to come from this or WACC, it has to be this question. I have seen this question appearing so many times in exams, so many times. I cannot even tell you. Out of 10 exams, 5 exams, 50 to 60% tax, correct? Then CAPM. What is the CAPM theory? Right? CAPM theory says that investor wants to invest in the stock market, correct? Right? Then he comes to you and asks for what? Recommendation. You say take a summer company stock, right? So if you use that only having a summer company stock will be a lot of risk. So you say that buy a winter company stock, the risk reduces. So on, you tell him different what industries of which stocks have to be bought, and because of which you would eliminate the company specific risk or unsystematic risk by diversifying the portfolio by taking 15-20 stocks from different industries, correct? Hence, unsystematic risk is completely diversified, but systematic risk can never be diversified. If it cannot be eliminated, so measure it and use it in your calculation. How do you measure systematic risk? Using beta. Beta is nothing but what? Tell me. The measure of systematic risk or measure of what? Tell me. No problem. Yeah. If you want to show, you can show. If you don't want to show, no problem. Anywhere, see, I have written my Excel sheets. If you see, I have written everywhere formulas also. Even if you don't write formulas, it is okay. Okay. So now coming to beta. Beta is what? Measure the market risk. How do you measure the market risk? Beta is nothing but you will take company A, whichever company ka beta you are trying to calculate, you take that. You take market ka index. Market ka index is nothing but your Nifty 50 or Sensex. उन दोनों में से take any index. If that market index goes up 1%, market index is nothing but an index of 40-50 shares that are there, right? Nifty mein Nifty 50 shares are there. So it takes an index of all the major stocks that are there. So how much does your market index go up and how much does your share go up accordingly, right? So if market goes up by 1%, share goes by 0.5, then beta is 0.5, correct? It is never in percentage, it is in times, correct? Beta is also called as the volatility of stock. Then you have something called all about beta. Have a look. Beta is less than 1, it is called less risky or less volatile, correct? Right? The stock risk is less than the market risk. If beta is equal to 1, then stock risk is equal to market risk. Volatility, that is that. Beta is equal to 0, that means stock is not affected by the market or there is no market risk at all and it is a risk-free rate. Beta is greater than 1, that means it is more risky or more volatile and stock risk is more than market risk. Correct or not? I have proved all of this, correct? Have a look. If beta is less than 1, then KE will always be lower than RM. Correct? KE will be greater than RM. KE is equal to RM if beta is equal to 1. KE is less than RM. एक बार KE तो करने दो, right? KE by CAPM. आ जाओ. KE by CAPM basically says what? Now see, when you have to go and invest some money and your risk covers, you will go and invest into risk-free or government securities. It is called as the risk-free rate at which you invest, correct? But you tell me that, boss, I want to go into the equity market. I say, no problem. You can have what premium that you can earn, right? So 6% is, let's say, RF risk-free rate. 12% is you go to the market. So 6% the basic you will get, and the risk premium for going into the market is more 6%. So 6 plus 6, 12% is your overall return, right? If you go to the market. But if you want to go to a specific stock, then find out what is the volatility of that stock with the market. Let's say 1.2. So 6 plus 1.2 into 6 will give you 7.2. 6 plus 7.2, 13.2 is the specific return. So required return of shareholder is nothing but the cost to company. So K is equal to RF plus beta into RM minus RF. If you have done theory this way, my students have done theory this way. They will never forget that beta equity of company, how it is derived, how is the formula. Any theory question asked, we are ready, correct? So when it comes to all about beta, K is less than RM. So what happens? That means market risk or stock risk is less than the market. When beta is less than 1, beta more than 1, K is greater than RM because you are having more return than the market. Your volatility of stock is higher. Very high volatility means risky, correct or not? Then you have what? Theories of cost of capital. There are 3 theories of cost of capital. Theories of gearing. Traditional theory, Modigliani and Miller without tax and Modigliani and Miller with tax. The traditional theory says simple. At zero gearing, WACC is equal to KE. Zero gearing hoga, so WACC is equal to KE. Then as the have a look at all the 3 diagrams. So once you start gearing, right, KE will remain constant for some time. WACC will fall, right? It will go to a minimum point where the optimum WACC is obtained, but you cannot find it because there is no formula to it. It is only found by trial and error method. Once after the debt or gearing is at a balance level, after that, if you increase the debt in the capital structure, then this KE will go up and leading to WACC go up. Then for some time, WACC will go up, and then after some time, KD or the more debt you take, the more risky you get, and the bank will give you loan at very high rate. Correct. Then the max value of the company, where the minimum WACC is reached, that will be the max value of the company. That is right. Now have a look. Right here, it is said that what is the recommendation that is given here? That debt is recommended, but only up to certain limit. Then this theories of gearing has been asked as a section C question. Don't be surprised that when can WACC be used or theories of gearing are asked as So they will not ask you directly that state the theories of gearing. They will say that one of the directors says that taking a bit of debt is good, but very high debt is not very good. So which of the theory signifies that? So you have to write traditional theory. Then probably write whatever I've told you initially. WSCC is equal to KE for an ungeared company. Just as gearing is added, the WSCC will fall. KE remains constant. But after certain time, the equity will not be able to handle the risky debt, and hence the KE will increase, and hence the WSCC will also go up. Correct? The value of the company will be at the high. Value of company rises as the WSCC falls using the FCFF approach. Correct or not? I want to. So the recommendation in this, so director A's view of saying that debt is good only up to the time you get to up to optimum WSCC, correct? And then after that, debt will not be a very good thing, correct? And you could also say that the optimum WSCC cannot be calculated. You have to find it by trial and error method. Then coming to what? Modigliani and Miller theory, proposition 1 or without tax, correct? What is it all about? Have a look. Just as your gearing increases, the KE will go up and WSCC will remain constant, value of company will remain constant, right? You take debt, you take equity, whatever you want to do, it is completely what? Tell me. Useless, because WSCC is not going to fall, WSCC is not going to rise. But KE goes up in line with gearing. Gearing increases, KE increases. Gearing increases, KE increases, correct? Then coming to what? M&M, proposition 2 or M&M with tax theory, which says that boss, थोड़ा सा भी if you bring in debt, the WSCC will fall. KE will go up. KE and growth, KE and gearing both are increasing or are what? Tell me. Increasing in linear fashion, correct or not? But WSCC is falling such that somewhere WSCC will come and meet KD, right? At a very high level, correct or not? 99.9%. That means the recommendation given by this theory is debt is very good for your company. The WSCC falling, cost of capital going up. It will be at the maximum when WSCC is equal to almost equal to KD. But very high gearing. Yesterday we saw one question. Very high gearing may have a lot of what? Tell me, problem. So to avoid those problems, don't have very high levels of gearing. Correct? फिर special section C question. What is the special section C question all about? Have a look. This question, 2-3 questions of this type are there in your book. Huh? So tax coming, KD1 minus tax rate. Instead of KD, now you will use what? KD1 minus tax rate. Have a look. In theories of cost of capital. Proposition 1, you are using KD here, but here you are using what? Proposition 2 mein KD1 minus tax rate. Because of the KD1 minus tax rate, your WSCC is falling. Correct or not? Even if K is rising. Now special section C question mein, एक minute. What all questions have we done? ला फॉर कंपनी, मोस्ट इंपॉर्टेंट क्वेश्चन. ला फॉर कंपनी अभी नया आया है, आई थिंक गुलर्मो नहीं, नेक्सस लुमिनेक्स फॉर एक अभी न्यू क्वेश्चन दैट हैड कम अप इन द एग्जाम. Tell you the name, write down the name. Tufa company you have written. लाफोर कंपनी यू राइट डाउन. ZMOR write down. ZMOR अभी थोड़ी देर में आएगा, but ZMOR also write down. Then write down Grafem. Grafem was what? Grafem is important. TERP is to be calculated. Revised earnings, right? Then Marble company also. Marble, Grafem, and last कौन सा है भाई? Gamgi company. Gamgi company. These are the questions that you need to. Okay. Have you written this down? Please put it up in the group. Okay. So our special section C question says what? Section C question comes up where what they do, they give you two options. We want to raise capital. What would be the impact on profits, EPS, EAESH, and gearing because of doing whatever the issue? Correct. Either it could be right issue or equity issue or debt issue. Right. So generally, what happens? Have a look. You are referring to what pecking order theory. If company has two options of raising finance, that is debt or equity, it has to decide which option to be chosen based on the share price impact after the issuing both options. देखो basic formula क्या है? देखो EPS of company before the right issue, after the before the debt issue and before. तो आपको यहाँ पे you have to do what? Have a look here in law for company. What you have to do? Existing profit बताना है. Then right issue or loan note issue करने के बाद there will be profits that has to be calculated. Correct? So you can have a look. Right? TERP also may be asked. So here what you have to do from operating profit, that is PBIT to minus interest, tax, then dividend and whatever is remaining, correct? And accordingly, how much is the EPS? Impact on EPS, they will ask you. Impact on MPS using the PE ratio, correct or not? P ratio use करना पड़ेगा, right? EPS into P ratio. They have not asked gearing, but in the new questions they are also asking for gearing, correct? So what will be the difference, right? Your P ratio, EPS, we've done that already, correct? So no tension on that part. You can have a look. Very important question, right? I hope Gamgi company, Lafor company, ZM or company. I was saying yesterday, no, day before yesterday, Guillermo company, new question that has come up, where they have told you to find WIP period, finished goods period, account payable period. Mark this also important. Guillermo company. ZM or company will do in 2 minutes, correct? Aja, Guillermo company. Now come to risk adjusted WSCC. What is risk adjusted WSCC? Now see, all four, what? Aja, risk adjusted WSCC, correct? So you have total risk. Total risk is what? Beta equity. The total risk, that is market risk, that is there because all other risks are eliminated. Total risk is beta asset of the beta equity of the company, which is divided into two parts. Either it is business risk or financial risk. Correct or not? Business risk is business or operating risk is nothing but the actual working of the company, and it is measured by beta asset. And you have financial risk measured or denoted by what? That is to equity ratio. Beta asset is equal to VE divided by VE plus BD into 1 minus tax rate into beta equity and also beta debt. But beta debt always 0. So this much is the formula that is remaining. देख लो जरा. Beta asset is equal to business risk VE divided by VE plus BD 1 minus tax rate into beta equity. So total risk is beta equity of company. This is beta asset. Then that is to equity ratio. Correct. Now we did what? First we did how to do re-gearing and de-gearing. What is re-gearing? Also, what is de-gearing? Tell me. In de-gearing, what is given to you and what you find? Tell me. De-gearing.
We find beta asset.
So beta equity, this is given. So if I say de-gearing, must have written somewhere here. So we can say that beta equity is the total risk, and you remove the financial risk, and that is gearing from the total risk. Then you are left with only business risk, that is beta asset. So this process is called de-gearing. Total risk minus the financial risk or beta equity given, debt equity ratio, weight given, you find de-gearing or beta asset of the company. Then we found out what? How to do re-gearing. Beta asset or business risk is given. You add the financial risk, right? Somewhere beta asset is business risk of the company. Beta of what? Or volatility of the assets, right? Then we did gearing, de-gearing. De-gearing, re-gearing. Barabar. If you are okay with gearing and or de-gearing and re-gearing, then you can come to this part where company A is in the business of retail. It wants a new business of bottling business. Correct? It wants to start this business. So the existing WCC cannot be used because the first what? Let's say the first condition of both business being same of usage of WCC are not or is not fulfilled. Hence, the new business or the hotel business finds the proxy company which is already in the hotel business. The beta equity and VEVD of the hotel business are given to you. First, you do re-gearing. Beta asset is equal to what? You find the beta asset, that is the business risk of the hoteling business, and bring it to the new business, correct? And then you ask the old company that, boss, what is the financial risk that you need us to use? So financial risk from the existing business and from the proxy company, get beta asset, add both of them, re-gear and get the beta equity. Then with this beta equity, you can find KE of the company. With this KE, you can find WSCC of the company. This is how risk adjusted WSCC is, correct? Have a look, right? And then at the end, the procedure, the whole procedure I have given here. Have a look. बराबर है क्या देखो? Any problem? Can I go ahead? Sure. The whole procedure. With this now only dividend policy left. Our dividend policy also has, there are types of dividend policies. Dividend policy is in that note. Part 2 of the FM remainder theory, part 2. दिख रहा है क्या? Dividend policy, what are the types of dividend policy? There is a constant payout of dividend with growth. Your constant payout of dividend, your constant dividend policy with growth, constant payout and without. एक है same amount of dividend paid every year. It is constant without growth, or constant dividend policy without growth. Constant dividend policy with growth is that today I pay 5, 7, 9, 10, 12, 15, 16. It is constantly growing. Correct? And then there is a constant payout ratio where it says what? EA/ESH का certain payout ratio, your dividend payout ratio will be same. Correct? Then there is zero dividend policy. Company having very high growth prospect are paying what? Or do not pay dividend at all. And then there is residual dividend policy. So who uses which policy? Generally, your constant without or constant with growth is used by old and mature company. And residual policy is what? Done by what? Tell me. Your young and growing companies, right? Then factors to consider. What are factors? Profitability, liquidity. I think here I have pasted factors to consider in detail. Profitability, liquidity, correct? Profitability. If you don't have profit, can you pay dividend? Without EA/ESH, no dividend can be paid. Liquidity. If you have profit but don't have cash, then dividend cannot be paid. Legal and covenant limitations means what? The rules and regulation. Yesterday also we discussed covenants means what? Bank will stop you from paying dividend before paying interest, right? There are chances you will pay interest before, right? I'll do that. Yes, right? Availability of finance. If there is no finance available to pay the dividend, you cannot pay dividend. Then level of financial risk. If there is very high gearing, you will pay low dividend. If there is very low gearing, you will pay high dividend. Then there are market factors, other market factors that you need to look at, right? Investor tax consequence and market factors. Then you have what? Tell me. What is covenant I have given? Those are terms and conditions given by bank. Alternative to cash dividend is a scrip or equity issue. Correct, or scrip dividend. Instead of paying cash to the shareholder, you give additional shares of company to the shareholder. Correct or not? Liability of dividend is repaid via share issue. Then you have the share buyback. Instead of paying one high special dividend, you should buy back the company so that it reduces the final liability of future dividends. Scrip dividend versus scrip issue. Scrip issue is bonus share. Bonus share is capitalization of reserves, but scrip dividend is liabilities raised, which is taken care of by what? Tell me. Issue of dividend, or giving issue of shares in place of dividend. With this, I think 1 minute to go. There was one more thing. डिविडेंड रिलेवेंस थियरी, इसके पहले डिविडेंड इररिलेवेंस थियरी भी देना है. हाँ, M&M dividend irrelevance theory. What does M&M dividend irrelevance theory say? That payment stream of what policy has no impact on share prices. That means dividend is not relevant at all. They will say that dividend is not relevant. You pay dividend or you don't pay dividend, it does not make a lot of difference. Dividend will not have an impact on the share price, or dividend policy will not have an impact of share prices, right? Share prices will change as per the positive NPV projects, correct? And if you want to manufacture dividend, right, in that case you can sell the part of the shares and get your dividend, correct? But the problem with this is that dividend is not irrelevant. Dividend is quite relevant because there is something called as signaling impact. If dividend goes up and down, it goes as a what, positive or negative sign to the investors. Clientele effect means what? Tell me, investors liquidity. So generally, what happens if you pay dividend, same dividend every year, then you can predict, or the investor can predict the liquidity needs, right? That are there. And then what preference of shareholder to have current income rather than future chargeable. They would rather want current income. Dividend is taxed at a lower rate, chargeable gains at a higher rate. Generally, dividend zero pay tax at 0% in a lot of countries. Okay. With this, I think now with this, the whole portion of revision is done. Now, quickly, if you want to write down how much time to be given to what part, right? Right. You have your paper Friday, correct? You have three parts: section A, section B, and section C. Section A, में there are 15 MCQs, right? You will have 5 MCQ, 5 MCQ, 5 MCQ. One will be easy, one will be medium, and last will be tough. Correct? So you have 180 minutes with you. How will you utilize your 180 minutes? Correct? Yes, dividend relevance theory is important. Correct? Not from section C practical point, section C theory point of view, but A or B question or A or B type of MCQs have been asked from dividend irrelevance. Dividend relevance or irrelevance, I don't think I have not seen section C question. But dividend relevance, any signaling impact has once appeared in exam. Dividend relevance theory, correct? So easy, medium, tough. So if section A, 5 MCQs will be easy, 5 MCQs will be medium, 5 MCQs will be tough. Easy MCQs generally take 1.5 minutes, is what I've understood. Max 2 minutes, correct? Here it takes 3 minutes, and this may take 4 minutes. So this into 5, 7.5 minutes here, correct? 15 minutes here, and इधर कितना जाएगा रे भाई 6 by 20 minutes. So 30 and समझ लो on an average 40 minutes you can spend on the first 15 MCQ. So whenever I go to exam, first I will go through. So first, if I was there, I would go in section C and check which two questions are asked quickly, not reading the full question, but just I go and see that whether NPV is asked, whether what working capital is asked, or cost of capital is asked. Right? First I will do that, then come to section A. Right? Generally, I would skip the first MCQ. The first MCQ of any paper is the most difficult MCQ. It will look easy, right? But it will be very difficult. And at times it will be forex का MCQ. ऐसा होता है, right? Out of 10 attempts, 5 or 6 attempts, first MCQ is forex का MCQ, and it is a bit tricky. So first 15 में 5 will be easy, 5 will be medium, 5 will be tough. It takes around 40 minutes for section A, right? Section B also same thing, right? 5 easy, 5 medium, 5 difficult. It will take 40 plus 10, around 50 minutes to do this. More 10 minutes I am adding grace, means 60. 60 and 40, 100 minutes done here. So section A and B once done. Correct? 20 minutes extra for reading section B may what? The whole comprehension and everything. So at 100 minutes mark, right? Now you have 80 minutes remaining here for two questions. Logically 40 minutes here, 40 minutes here. But once I am done with section A and B, right? I will not know all the questions. Some MCQs you are going to have a problem. Don't even leave a single MCQ. All 30 MCQs, whatever guess you have to do, guess it and go ahead. Wherever you think your guess is not at 100%, put up a flag. So let's say you have put 10 flags, 5 this flag and 5 your flags, correct? And by 100 or let's say 100, 105 minutes you are here. You are done with section A and section B. Done once, correct? Now, out of these two questions, you will have one practical, one or two practical and two theory questions. First, solve the practical question, both practical questions. That is LPV or what capital rationing, lease versus Y, EAC or whatever. WACC, special section C question, whatever it is, correct? You solve those questions first, the practical year and practical year. Around you will take 40 minutes for this. 20 minutes to एक section C question go, it will take 40 to 45 minutes, let's say, or 50 minutes, worst case scenario, right? Then after this, once these two practical are done and you are very confident about the practical, and let's say you're 60 and more 20, 25, that means 85 marks is done. 15 marks theory is remaining. First, by the time you're writing practical, your brain will still keep on working on those flags. If some question from the flag is something, so take another 10 minutes here. Go through all the section A and B questions. Every question that is there, right? Go through all of them. Or maybe if you are very confident about certain questions, the flagged questions, all the flagged questions, go through all the flagged questions, remove the flags, and then in the last 20 minutes, 20 to 25 minutes, correct? Write all the theory. Till the last minute, write the theory. This is how I would solve the question paper if I was in your place. Is it okay? How you use your 180 minutes in exam? Any problem?
No, sir.
Perfect. This is how I solved my exam, right? I scored fairly well at 74. Okay. 74 or 76 score, right? That also with just 10-12 days worth of preparation. But my situation was different because I knew everything from CA final. I gave my CA final just, I think, 1 year ago. I given my CA final. It was very thorough way with what FM, SFM, correct? Generally, you will have one question from either forex, interest rate risk, business valuation, one or two questions. At times, all three questions, right? One forex, one interest rate risk, one business valuation. But one out of the three, 100%. So if I would have been on your place, every section B question of forex, interest rate risk, business valuation, I will go and solve it. I will not even leave a single question. Okay. With this, I think all my duties towards my students, may it be what students who have joined with me, may it be students who have come for the revision class. I hope 5-10 marks here and there with this, whatever revision, whatever guidance you want to call it. I hope I could help you even with 2-3 marks, which may take you from 47, 48 to 50. Okay. I hope you pass with flying colors, right? And as before, next quarter also, if you want to join any batches, we are always happy to help you. Correct? Yes, like the ऐसा WCM sometimes it may come, it may not come. It's not compulsory. But yeah, I would 100% tell you that forex business valuation and interest rate risk. Correct? 100% tell you that there are chances that the paper will be set on the lines that we have predicted, right? I'll tell you one funny story of one of my papers so that it helps you. One of my, I think, SFM or consa paper, I don't remember, CA final paper. I went to the paper and 60, 65, 70 marks was unknown in the examination hall. So in CA, what happens? You get the question paper before 15 minutes to read. In that first 15-20 minutes, there were a lot of who and ahs in the examination hall. Okay. So logically, what happens is you go to any paper, right? Once you start, you go to the question paper, and in CA there is a 1 hour bell that happens. That at end of 1 hour, there's a bell that is rung, and if you want to leave the paper and go home, you can go. 70-80% of the class went home. Out of the 70 students, I think 50-52, right? वो चले गए घर पे, right? Because 65 marks, 75 marks from outside means you have not even seen those kind of questions, correct? In your paper also 15 marks, 10 to 15 marks, 5 to 10, maximum 15 marks outside say because it is a professional exam. You can predict as much as you want, correct? But something is going to come from outside. Up now, my situation was that 65-70 marks, I don't know anything. You understand? In a 100-mark paper is 70 marks. You don't know anything. What you will do? I wasted first 35 minutes reading the question paper because I am not understanding even a single question. What I will do in exam, correct? So I thought about it a lot, and then I said that first check it, right? Whatever happens, I started writing some of the other things. The 20-30 marks I knew. Because see, you need to know at least one question correctly to start writing, correct? I was not even able to or not confident about even a single question. But I survived that question or survived that exam, some 70, 65, 70 ऐसा कुछ. I wrote 75, 80. The 80 तक निकाल. I got around 55. I passed in that paper. That gave me a very good feeling that everyone around, right, left. 80% of the class was what? Empty when we were writing the paper. So I would tell you that even if it is the toughest of the toughest paper, trust your preparation. Okay. Some or the other thing. Now see, the psychological impact, right? That happens. Now see, if 80% of the students have gone, they would have just written their name, they would have written some or the other thing. They have written nothing great for the what? Examiner to check. He will be irritated. Your paper, even if it is fairly good, he'll be very impressed and give you some marks. Even if he has to give you 10, he'll give you 11, 12. Correct or not? Right? I told you section A first. Right now I told you everything. Right? Always do section A first, then section B, then section C ka practical, and then section C. Okay. So I'm telling you again, stressing the fact. अरे बेटा section C में 1 NPV also. See, there are two set of papers. One will have NPV, the other will have something. Correct? So one out of the 4 questions, 2 sets means 2 section C questions per set. That means 4. उसमें से एक NPV comes. Other 3 minimum. If you have good luck and NPV comes in your set, have a small dance in the examination hall. Correct? मेरे को I got NPV का set. My paper was done 45 minutes before even what the time that is there. A very easy paper for me. But I had learned theory MCQ. What I had done is I had done this. I tell my students also, those who are my students will know, to make a index of all the questions. Have I told you that? Tell me. Index of all the questions, all the scribblings of all the question I make. So generally I made that for FM. So I knew which questions and in the morning of the exam, which were the most difficult questions and I need to go through or learn before going to exam. I had all that marked, correct? Right? Correct. Yes, can come in section C, has come before. I have taken 2-3 questions of that in the notes as well as the Excel sheet. Cash forecast. Overtrading also can come. Overtrading has been eliminated recently from certain exam kits. So examiner will go that route. That is there. You have one question of overtrading. अपना Oscar ने Gorva company that you can look at. ठीक है. चल. All okay. Settle down, right? If you have a lot of anxiety, tension, pressure, it is going to be till that exam day, right? Try to 1 day before exam, correct? 1 day before exam, right? One night. Try to have proper sleep, right? Madam, I told you out of the 3, there can be anything in sections. I cannot give you percentage, probability or something of that sort. Correct? Over trading and over capitalization में कुछ ज्यादा difference है नहीं. There is no such question as over trading versus over capitalization. That will not come. Right? They both over trading is under capitalization. ऐसा लिख के दिया है एक जगह. Correct? You can have a look. There is only one MCQ based on that. Correct? But over trading as a question, right? Source of finance theory question has come up. Can come up. Islamic finance, I told you, important. So that is how things work out. That is me for today, right? I don't have an important PDF, but I think I've sent you the important questions, 15, 16 important questions.
Yes, sir, you send in a WhatsApp.
So you can send that in the group. Those are important theory questions. Don't be surprised if 3 theory questions come and 2 come from my list that I have given. Has happened a lot of times, will happen every day. Correct? So don't worry about that. Right? What happened? What has Mustafa asked? in NPV. See, I have told you whether to give it in dollar thousands, full dollars. That depends on the question. The how question is. If question says answer in dollars, NPV in dollar thousands, use dollar thousands. If the flow of the question, all major amounts are given in dollar thousands, you could use dollar thousands or dollar millions. At the end, when you write, you should write what? The NPV is dollar 500 million or whatever, 521 million. It is positive, negative, and hence we should accept or reject. Correct? Ref, send you a WhatsApp. Okay. Chalo then, guys. Can I wrap it up? Topics we should go. All the topics you should cover once. If I had been on your place. So I had developed, when I studied, I had developed a way that at the end, in one day also, I can go through the whole portion. Right? Like a series, matlab. See, I would say now you have all the recordings. First day 3 hours, yesterday 2.5 hours, today 2 hours. Is what? If you want to revise the whole portion, you can do this tomorrow once, day after tomorrow once, and Friday you can go to exam. Tomorrow your morning you start this, by afternoon you complete it. After that, all the important questions that are there, I told you. Tomorrow complete that. Day after tomorrow, as per your understanding, all other questions you could do. Exam के दिन पे morning में difficult questions and theory questions all you can see. Okay. Bye bye.
Okay, sir. Bye, sir.
All
Thank
the
you,
best
sir.
for your exams. I hope you all pass, right? If you pass,
Thank you.
right, just consider what sending me your results. I'll be very happy to congratulate you, right? Whatever your result is, even if it is pass, fail, whatever, you can send me your results. I will surely help you with the next quarter plan. Even after exam, if you have queries for next quarter, please feel free to call or message me. I'll help you out with all your queries and help you plan your next quarter. Correct? Yes, ma'am. Yes, sure.
Thank you, sir. Bye, sir.
Bye, bye, bye.
Thank you, sir.
Welcome, guys. Bye.